Hello and welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal and we have lined up a power-packed show, and here's what you should expect on the show today. First up, we will analyze why mutual funds are exiting large caps and if it is the right time for you to increase exposure to mid and small caps. We'll be joined by Nirav Karkera, Head of Research at Fisdom. Next, we will understand Purpose of Money with Vinayak Sapre, author, public speaker and financial coach. And finally, on our last leg, we'll drop on the counter to get your mutual fund portfolio queries answered by Amol Joshi, founder, Plan Rupee Investment Services. So do send us your queries on our WhatsApp number, which is 8657974571. You can also email us your queries on the Money Show at etnow.tv. That's the lineup for the day, but then let's get to the top headlines of the hour. Bulls take charge of the large street as Sensex hits a record high while Nifty ends the day at record closing high. Vipan Mehta of Elixir Equities expects Sensex to hit the 1 lakh mark in the next 1,000 days. Sony says it takes the SEBI order very seriously after regulators' adverse order against Subhash Chandra and Puneet Goenka terms media reports on the future of Zee-Sony merger as erroneous. Department of Consumer Affairs advises restaurants to not levy service charge mandatorily. The matter is pending in Delhi High Court even as face-off between customers and restaurant staff become a common occurrence. Elon Musk is all praise for Indian Prime Minister Narendra Modi promises Tesla's India entry as soon as possible. US President Joe Biden calls his Chinese counterpart Xi Jinping a dictator hours after US Secretary of State Antony Blinken's China visit. No reaction from the Chinese government yet. Bitcoin rallies over $28,000. Primary catalyst appears to be the growing institutional interest in Bitcoin from companies like BlackRock. So over the last couple of months, broader markets have outperformed benchmark indices, and many experts believe that this outperformance may continue going ahead. Now, interestingly, reports indicate that many mutual fund houses have trimmed their exposure to large caps. So, is it the time to bet big on mid and small caps? What are the fund managers and fund houses thinking? Let's answer all of these questions. We have Nirav Karkera, Head of Research at Fisdom. Nirav, good evening and welcome to the show. So, let's list out the AMCs and funds which have exited large caps, and what kind of large caps are we talking about? Show us the data.
So Kavita, there are a variety of funds across categories. One would imagine the exodus to be majorly in the flexi-cap category. There are various funds across the flexi-cap and multi-cap category that have exited large-cap stocks. And, probably the key stocks are the ones that also saw quite some bit of run-up in recent times. To name a few, if one would look at an industry level, the key stocks that were exited would include Kotak Bank, ITC, HCL, Zomato. These are the stocks that you would also notice are the ones that have been witnessing a rally almost secularly since quite some time now. So there was a fair bit of profit booking there and some bit of rebalancing, reconstitution that has happened in most of the funds.
Right. So the kind of stocks that are we talking about are of what sector? Any bias to a specific sector that we are talking about over here, Nirav, or it's just across the board wherever they see there's profit booking?
Yeah, I would say that most of this has to do with profit booking, availability of opportunities elsewhere. A pattern could emerge, but it would be purely coincidental. I do not really see any sectoral trend in terms of exits from large cap.
So if we, for example, now the strategy for a multi-cap and a flexi-cap, if we just take these two categories, would be different. Now, if these flexi cap funds are exiting few large cap sectors or stocks, are they replacing it with another large cap, or you are seeing the exposure going increased in mid cap or small cap categories?
In fact, it is the latter, and one would notice a clear trend where there is a slow and gradual exposure being built towards mid and small cap opportunities, and this is visible across categories which have a really flexible mandate. We could talk about flexi cap. We could talk about probably value or contra funds also as in category. In fact, if we about multi-caps also, there is a fair amount of flexibility that is allowed to the fund manager in terms of expanding exposure to market caps, and we'll see a clear sense of increasing appetite for mid caps and small caps, probably tilting slightly in favor of mid caps. But yes, clearly the rebalancing is not happening back into large caps. There is some sort of shift or gravitation towards mid cap. It is very gradual at this moment. It is not significant. It is not as if fund houses have started going overweight or overboard with any of these mid or small cap market segments, but we can see a return of appetite after quite a long time, probably since almost a year and a half or over it. The most flexible mandate funds have largely been skewed and tilted towards large cap funds. So this is gradually changing.
Think a category like flexicap would become more volatile if there is the increased exposure in mid cap or small cap? How would you explain this to our viewers? I mean, primarily we see that a lot of flexi cap are large cap biased. Not necessarily that the fund is changing the kind of theme or the tone that they have decided on, but in terms of volatility, in terms of their risk profile, risk appetite, how would an increased exposure in mid cap and small cap change further on?
Right. So an inclusion, or let's say rather an increase in exposure to mid and small caps, could make the overall portfolio of flexi cap funds slightly more volatile than it would be if it was heavily skewed towards large caps. But at the same time, one must understand that only those investors are supposed to invest in flexi cap funds who are basically trying to outsource their optimization decisions to the fund manager. So there are investors who try to optimize for their own risk profile and their investment profile. They clearly choose between a combination of large, mid, and small cap funds, pure play ones. But for those who want to optimize market cycles and want to optimize for valuations and opportunities in every segment, it is best to leave the decision to fund managers. So a fair bit of volatility is obviously expected. In fact, it is not just on account, obviously, it is on account of mid and small caps, but even if you see from a longer duration standpoint, and if you consider the very essence of flexi cap funds, the essence of volatility is built in, inherent. Lesser volatility due to large cap skewness could be a coincidence that at that point in time, the funds exhibited lower volatility than most other, but it would be attributable to a coincidental point in time wherein the funds were less volatile. So, long answer short, will the volatility increase on account of increased exposure to mid and small caps? Definitely yes, because by nature, the mid cap segment is viewed as slightly more volatile than the large cap segment, and small caps being far more volatile than the mid cap.
Nirav, any clue on what kind of mid cap and small cap are being added in terms of sectors or specific stocks, if you know any?
So there are a few, mid caps that are being added, but I wouldn't as much say as a sectoral pattern is emerging. In fact, the best thing about most, actively managed mid cap and small cap exposures is that most stock selection processes are bottom up, and the sector is basically an output or a byproduct of the investment decisions that are made. So the migration that we are observing into the mid and small cap segment are more so sector agnostic, and has probably nothing much to do with a specific sector doing well or not. In fact, the mid and small cap segment also offers opportunities in a very disparate or a set of pockets, right? So it really depends on how wide do you cast the umbrella, and how wide do you bucket into a certain segment. But any of this would be merely a byproduct of the bottom up stock picking that has happened. So no sector trends emerging there.
Nirav, now the question is now funds and fund manager exiting large cap, increasing the exposure in mid cap and small cap. Does this also translate in an individual's portfolio strategy? Time for them to increase exposure, or maybe even the SIP amount in specific mid cap and small cap funds? Can an investor take that step?
Yeah, so Kavita, there's one thing that I've noticed that there is also coincidentally an inflow into pure play, an increased inflow into pure play mid and small cap funds at this point in time. So it happens so that investors are already in aggregate following a similar trend wherein there is more money being diverted towards mid and small cap plays, like most fund managers are doing with flexible mandates. See, one thing is for sure that it is only when there's a storm that the value of a ship is really appreciated. But as soon as the skies clear, everyone's looking to hop on a speedboat. So historically, it has been well established that mid caps and small caps have the potential to outperform large caps. So and now is the time where things are really lining up, stars are really aligning for the mid cap segment and the small cap. Obviously, later on, slightly below mid cap, because of a couple of reasons. The markets and the broader economy is entering an expansionary cycle. We are staring at an investment cycle uptick happening right in front of us as we speak. There are many market leaders available in the mid cap space, small segment leaders available in the small cap space who were troubled by macroeconomic headwinds. But now that the skies are clearing, now that the macroeconomic situation, the macro blur is sort of clearing out, there is a whole lot more visibility on the growth potential. In fact, post pandemic, we saw many mid caps and small caps being downgraded, and now we have moved into that part of the cycle where the downgrades are slowly and gradually flattening. The pace is reducing. We expect ourselves to be at a cusp of a reversal in this trend. Probably a couple of quarters or a financial year down the line, we would see a series of upgrades happening in the mid and small cap space. So with all and the most important thing, valuations. If you look at since most investors base their decision on relative valuation, you look at the 12-month forward PE or price to book, it has been clearly coming off of the peak. It is not quite towards the mean. It is not quite at the mean, but it is fast approaching the mean, which indicates that the valuations are looking slightly more favorable than it was a year back from now. So the stars are aligning. There is more visibility, more clarity on the macroeconomic situation, and there is an increase in the appetite for among investors generally and fund managers generally. So if anyone's investment profile and risk profile does permit to do so, now may be a great time to start increasing exposure to small and mid caps, especially in the satellite as portion of their portfolio. That nothing changes for the core strategy, but within the satellite, if now could be a good time to start tactically going slightly proactive with allocating to mid and small cap stocks. And one needs to do it really selectively. A word of caution there for those investing in stocks directly, it is not an uptick that we can see in a developing in a broad based manner. It could be in select pockets and select opportunities. One needs to be careful about it. At this point in time, we would probably look at actively managed funds as a close alternative for those who do not want to go through the stock selection process. And we would place an actively managed mid and small cap fund even higher and above passive opportunities, having exposure to the same segments.
That was quite an elaborate answer and also a good explanation for investors whether they want to invest through mutual funds in mid cap or small cap or want to go through direct equity. But also for people concerned about their large cap fund performance, you think it's time, if your fund is not performing since couple of quarters now, you figure out an exit route and maybe try going for a passive strategy in a large cap space?
Yeah, so I would say, to answer the first part of the question, there may not be a need to immediately cut exposure to large caps because large caps are typically the anchors that one holds in one's portfolio. Unless one wants to be extremely aggressive or extremely tactical with their way of portfolio management, I feel that large caps still deserve a very solid position and allocation within one's core portfolio. So there's no reason to really move out of large caps. But yes, Kavita, as you rightly pointed out, passives are quite an interesting opportunity that has surfaced over the past couple of years, and it is a really efficient way to take exposure to large cap stocks, especially now. When there's a lot of opportunity coming up in the small cap and mid cap space, and knowing that large caps will continue to do well, and it does deserve a allocation in the core portfolio, it might just make sense to allocate into large caps, into passively managed, into passive large cap funds, which are basically tracking the large cap indices. It could be a far more cost efficient manner so that you manage to get those extra returns through lower cost and through more efficient tracking of the indices. So in fact, there's a whole lot of opportunity for the broad-based index also that stands to benefit from any sort of basket buying that happens, or inclusion of the index package into foreign portfolios. There are certain tailwinds also attached in benefit and in favor of indices. So this could be an additional benefit to opting for a passive fund in the large cap segment.
So, that's a solution for you if your large cap fund is not performing, and also right time for you to maybe have an extended strategy in mid cap and small cap. Thank you so much, Nirav, for being on the show, helping our viewers with that today.